Hi, sisters and friends and bookkeeping mamas. Welcome to Bookkeeping Mama, Bookkeeping Advocate. Trevonna Parker here, your bookkeeping mama and your bookkeeping advocate. As you guys know, we aim to help families avoid generational paycheck to paycheck living, or worse, generational poverty, by teaching moms just like you to help their families, to protect their families, to nix their mortgage, defeat their debt, tame their taxes, make more, and live free, all while still glorifying Christ. Today, I want to talk to you guys about savings and multiplying your savings. So I was talking to a client and we were talking about the benefits of a CD. So a CD is basically an account that you get at a local bank or a credit union. And what they do is they let you put your money into this area where they'll give you a high interest rate of a return. And the reason they're able to give you a higher interest rate is because with a CD, your money is locked up. So your money is sitting there. You cannot touch the money for a certain amount of time, maybe 7 months, 1 month, 2 months, 18 months, 5 years. And they give you this great opportunity to let you grow your funds. Now, when we were on the call, we discussed the CD. We also discussed a high yield savings account. Now, a high yield savings account gives you a really nice rate of return on your funds, but your money is not locked up. It's in a savings account. And of course, you know that in America, savings accounts have like some rules where you can't take a certain amount of withdrawals for a certain period of time. For example, only 3 withdrawals per month in a savings account. But we talked about the differences. And I said, well, you know, in a CD, your money's put aside and you can't touch it. In a savings account, your money is there and it's available for you. So a pro and a con. You have, well, not a pro and a con. When it comes to managing money and understanding your finances, you have to make sure that you know yourself. So when I was talking to this particular client, they said that they wanted to have the money to a place where they cannot touch it. So that brings up a CD. Another client I was speaking to about this wanted money that was available. So they didn't want to lock the money up. And this came on the heels of talking about a whole life insurance policy, which is to me like one of the best of both worlds because you also get a death benefit at the end. But that's another conversation. But when it comes to these decisions on how you should save your money, you have to ask what's best for you. So when I was talking to this particular client, I said, okay, well, if you want to put it in a CD, you have to make sure you put some things in place because you don't want to touch it. Your goal is to not touch it. So do you have your super emergency fund? That is to me like $1,000 that's just sitting around that you can just get to easily. Then I asked for the emergency fund, which is 1 month living expenses. And then there's the survival fund. That's 3 to 6 months living expenses. And it helps you to, you know, survive if something unforeseen happened with a job or something along those lines, gives you the opportunity to get back on your feet. Now, the emergency fund, let me go back to the emergency fund, because the emergency fund, it should be at least 1 month living expenses, but it should also be able to cover any deductibles that you may have. So for example, and not the higher deductibles, like you're like, you need your roof repaired. Sometimes roofs have a $5, $10, $15, $20,000 deductible on them. So that's when I think about the emergency fund, that should cover something along those lines. And so the first thing is to understand your needs and to understand your limitations. So for example, someone saying, I don't want to touch the money. I need it out of sight, out of mind. Otherwise it's going to get spent. You know, you may consider a CD, but in getting that CD, you need to prepare for that CD. As far as someone who says, I want my money always available, I don't want any penalties, I don't want any issues, then there you go, that's a high yield savings account. Now, having said that, you have to go and measure what you think is a good interest rate. So let's just go back and take a step and talk about what interest rates are for. So as you guys know, if you've listened to anything that I've said before, the bank is using your money. So I was actually, when I was on the line with this particular client yesterday, I was talking about, I went to their particular credit union and I pulled up a sheet with all of their bank rates. And they had the bank rates for their CDs, their lines of credit, auto loans, credit cards, and their balance, or it was a different. Let me just take a step back. When you go, and I keep taking all these steps back because there's so much on my mind, and this is just kind of impromptu video. When you put your money in the bank, they're using your money for business investments for themselves. And their reward for that to you, a way to compensate you for allowing them to use your money, is to give you interest payments. So when you put your money in the bank, they can lend, I want to say, up to 90% of your money at a time. And they pay you an interest to be able to do that. Now, the interest that banks are giving are like 0.02%, 0.01%. Some don't even give any interest, even though they're utilizing your money for business. Now, when you say, well, what business can a bank be doing? They're just holding money. Well, when you go back to your bank and you get a loan from your bank, credit card, auto loan, personal loan, home equity loan, home equity line of credit, the interest rates are much higher. The interest rates to take money from the bank are 4.99, 7.99, 18.99 if you get a credit card, 27.99 if you get a credit card. That's how they make their money, by lending your money out. Now, you're putting your money in. They're giving you a 0.01% to use your money. But when they use your money, they're charging 9.99% to lend it out. So that's how they make money. So in case you didn't know that, banks are using your money, and banks are making a lot of money using your money. So when I went to this client's credit union and we looked at that sheet, the interest rates for the savings account, the checkings account, the CD, the money market account were all, just like I said, fairly low in comparison to the interest rates for the car loans, the home equity line of credit, the personal loans. So it's very important for you to understand that as well. Now, what I would say in this current market, a good interest rate for a high yield savings account or a CD would be anywhere from 4% and above. Now, what I noticed yesterday as I was going through this was that there's a very low barrier to getting into a high yield savings account or a CD with a nice rate. It used to be in times past that the longer you let them hold your money, the higher the rate. But what I saw yesterday was like the smaller or the shorter time periods were yielding higher results. So for example, a 7-month at one credit union or one place that we looked at was 4%, whereas the 5-year was only 0.3%. So I thought that was pretty interesting. I'm also noticing a lot of places that are allowing high yield savings accounts with no money, no minimum. It used to be that there needed to be a minimum for the high yield savings accounts. Now, just in my mind, that's always something to look out for. I want you guys to be mindful that banks use your money, but banks also can stop people from using their money. So that's something to consider. You know, back in the day, people had all their money under their mattresses, and now they put it in the bank. The banks use their money. As you can see, over the years, they've decreased the interest rate. But also be mindful that banks can stop your money. You've seen it from in the news. You've seen other people money being stopped. So be very careful when you're utilizing these avenues. Just be mindful that these are businesses and they have the option to do what's necessary for them to survive, and you are putting your life savings in their hands. So make wise decisions with the interest rates, but also make wise decisions with the companies that you choose. Yeah, I think that's all I'll say about that. If you guys have any questions about a CD, high yield savings account, or the best place to park your money, again, I'm all about whole life insurance policies. I think that's something that you definitely should consider. But let me know. Leave a comment, and that will help more people to see the videos. While you're down there, please like the video, subscribe to the channel, and hit the notification bell so that you can get any alerts whenever I upload a video. I think that's it. You guys have a great day. Keep your money safe, and more importantly, keep your soul safe. If you have any questions about that, please look into the description of the video. Bye now.